No, not all the major banks did pass on the full interest rate cut. Commonwealth Bank and NAB did pass on the 25%. ANZ passed on only 18%, and I think Westpac passed on 20%. Then there were some of the smaller banks, like not smaller but AMP and like Citibank, who did pass on the total interest rate cut. I think that's an important question because it doesn't necessarily apply to all loans, and that's where you need to do your homework and contact your bank to see if your loan does actually qualify for the interest rate cut. You might already be on a significantly reduced standard variable rate and would not qualify for the interest rate cut. On a personal level, I think the interest rate cuts would have the most significant impact on our mortgages. Mortgage is the most significant expense for most of us on a monthly basis, and we always shop around for good electricity rates and mobile rates and insurance rates, but we never look at our mortgage interest rate. So this might be a good opportunity to maybe look at refinancing your mortgage to take benefit of the lower rates that are on offer. Another possibility would be to keep your monthly payments the same, because then that way you would, by paying the same off on your loan every month, you would pay less interest over the period of the loan and pay your loan off sooner. And from a business perspective, I think you can look at your funding strategies and also possibilities of growth through debt. I would advise you to contact your business advisor. You can look together at your business. Your advisor can work out some key performance indicators, and you can determine if growth through debt, for example, is a possibility for your business. That's something to consider too, because with the rate cuts, many of the banks has lowered the interest that you earn on savings account. And again, I would encourage that you contact your financial planner if those kind of investments are part of your portfolio, and you might have a new fresh look at considering those investments that will be impacted by the lower earnings. The Reserve Bank of Australia, I think, we're not seeing the growth in the economy that we would have liked to see. For the first quarter, the CPI was 1.3%, and then unemployment for the nation is still sitting at 5.2%. And the interest rate cuts is an attempt to see if they can stimulate the economy and encourage some growth in the economy. One of the things that economists always say is with interest rate cuts, we might reduce or weaken the Australian dollar, and that's not good news for importers. Dr. Philip Lowe, the governor of the Reserve Bank, did suggest that we might see some future interest rate cuts. I think none of us would know for sure, so that's one of the things we'll just maybe have to see and just wait and see if they do follow through with further cuts.